Invest, the CI Financial Company, Veritas Financial Advisors Managing Partner Greg Branch, and Courtney Dominguez. She's a senior wealth advisor at Payne Capital Management, and it's a group that I am not affiliated with. Rob, I want to begin with you, and let's just start with this, the greatest risk, because yesterday there were a whole lot of headlines. So what's the greatest risk to this market, and is it enough in your mind to trigger the move down to the downside?
Yeah, I think the biggest risk in our view, Charles, is really this Georgia Senate race that we're going to have in January. You know, the big move up that we had is really this idea of gridlock, and with Biden, you know, potentially getting the presidency there, not being able to get some as aggressive tax agenda passed. But if that unwinds and there's a tie, let's say, and Kamala Harris winds up being that tying vote, that is not going to be perceived well for the market. And look out below if we see that happen.
All bets are off. Greg, what do you think?
Well, I actually think it's our current gridlock that poses the most risk for us. While we're still disputing the resolution of the election, all of the political will and bandwidth is being absorbed when what they should be discussing is the stimulus that our economy so badly needs. In terms of risks, also the rapidly rising COVID numbers present a danger sign. Many of our most well-known, the world's most well-known advisors are positioning themselves that the fourth quarter will see a drag as these numbers continue to increase. And we so far have not been able to tame this.
All right. Well, you know, Courtney, it's ironic because we got the largest numbers again today, and this is a heck of a rally. What do you see in terms of the greatest risk to derailing this market, because it hasn't been staying down long?
Yeah, and I really am not as concerned about politics. I would say actually COVID is probably one of the biggest risks we have. And are there going to be further lockdowns? And we saw when Europe was locking down, there was definitely some nervousness with that. And it's nothing I'm necessarily worried about right now, because here in the U.S., those lockdowns are a lot more localized. And actually, Monday was a really good example that we saw the vaccine come out. The markets did fantastic. I think that's just a good idea of what can come in the markets once we get that reopening happening. And right now, I think the markets are probably still lower than they could be if we did have that clarity.
All right, Greg, I want to go back to you because I think this earnings season has been pretty remarkable. 84% of companies have beaten the street. Your blended loss is 7%. The street was looking for 21%. Even revenue, 78% beat. Revenue, 78% beating in a recession. I'm impressed, but what are your takeaways?
Yeah, I agree. It's been a spectacular third quarter, relatively speaking. I think that there will be even more optimism after a fourth quarter that should see those that were well positioned deliver really strong results. What I'm really keeping an eye on is that those associated with e-retail are going to weaponize the massive share gain that they've accrued over the last 6 months and post some really blowout fourth quarter numbers. That said, as we spoke, the COVID numbers will start to bear on businesses' outlooks for the fourth quarter in the year. We saw that in SAP's earnings, where they started to indicate that businesses were actually slowing their spending. And that's something that also warrants us keeping an eye on.
Courtney?
What I found pretty fascinating with earnings season is I agree it's been a really good earnings season thus far. But if you really dig into it, certain things like your small caps have been some of the leaders in the things that are beating their expectations, as well as some of your cyclicals. And we've been talking a lot about this over the last few months, that adding to some things like your small caps and your value companies are going to be good plays. And we're starting to see that come out right now during earnings seasons. And I think if you break it out, those are really some of the big winners that we're seeing.
You know, even to that point, we were talking about record COVID cases. Courtney, you and Greg have expressed this as being the number one concern, and yet the COVID stocks, even in the day when the market's erupting, are down. Zoom, Netflix, Peloton, they're all getting beat up. It really is remarkable. The market, to me, doesn't seem to say that this is the big issue per se, although we know how impactful it is to society. Rob, let me go back to you about earnings in general. And by the way, got to give you a shout out. Farfetch, you gave it to us, I guess, 3 or 4 weeks ago. It was a home run. Today, it's a grand slam, so take another bow, my friend. But now for you, the earnings in general, what's your takeaway?
Yeah, I mean, I think it's been an amazing earnings season for the companies that are able to execute in this environment. And that's why we've been talking about this for a while, Charles. This is really not an indexing type of environment. You want to do bottoms-up stock picking because it's just very clear in an environment like this, companies like Farfetch are the ones that are going to be able to execute. But, you know, you talked about Zoom being down today. Powell was talking at the central bank forum yesterday, really about this structural shift and the fact that the psyche of the consumers now being locked in so long, this isn't going to change so quick. So actually, I've talked about Zoom for a while. We've used this pullback into the 300s to actually take a new position in that stock. I think those are long-term winners investors should look at, Charles.
All right, move over, Faith Popcorn. Here comes Jay Powell. The Michigan consumer sentiment number for November, it declined from October. In fact, came well below consensus. And in fact, when that number came out earlier, the rally stalled. We even started pulling back a little bit. Now, here's the interesting thing. The biggest reason for the decline was plunging optimism among Republicans. If you look 6 months out, even the current optimism, in fact, was up. The spread between how GOP consumers feel right now versus 6 months from now is absolutely amazing. Courtney, I know you mentioned that you're not into the politics of much, but if there's one segment of if half the population starts to lose their enthusiasm as consumers, could that hurt the market?
I don't think it's wholly surprising that we're seeing that. We're right in the midst of a very polarized election here, and so it's not that out of the norm to see that come into some of these sentiment numbers. But when we look at it, I mean, at the end of the day, we're investing in these companies, and those companies are very optimistic right now. We actually just came off a week last week with one of the highest amount of dividend increases that we've had since February. And that's showing that these companies are really optimistic on where they are going forward. Not to mention manufacturing orders, which is also a good forward-looking indicator, are really positive right now. They're at a high, I believe, about 17 years. So when I look at how companies are optimistic, I'm going to take that over some politics right now because I don't want all of the political news to overshadow anybody's investment strategies. Because at the end of the day, we're investing in those businesses.
Okay. And here's the thing, Greg. We obviously, Republicans are going to be disappointed right now. But you put that against the CPI numbers yesterday, and we do see where there's a lot of industries that do have pricing power, and maybe that's where the confidence is coming from that Courtney just mentioned. Your thoughts on that?
Yeah, and I agree with Courtney. I think that businesses and investors tend to look a little longer term than survey respondents, so this is not surprising. We have a number of issues in front of us that need resolution. You named a few of them: the stimulus, the election, getting control of COVID, a vaccine, and I expect a lot of those issues to be resolved in January. So these numbers don't worry me. Let's take the temperature on the other side of January when some of these short-term uncertainties have reached or are reaching a resolution, and that will be data that is better served for us to pay attention to, I think.
Rob, how are we looking between now and the end of the year? Does this rally continue? Will we end at the end of the year higher than we are at this very moment?
Yeah, I think so, Charles. I mean, we talked about this, there's no other place to put your money right now. It's going to be in stocks. Now, what sector is going to do well? I think you continue to have that barbell, dividend, and growth stocks. But until the end of the year, I think you're going to see things continue to tick up.
The barbell thing, I know, I'm going to start calling time out on that one because I feel like the guests get over with that, right? You can be right either way. Can you be more specific on the barbell?
Well, yeah. Well, you know what it is, Charles, really. I mean, I think dividend paying, the other guest talked about dividend growth stocks. Those are really the new bonds, Charles. So you used to really allocate between equities and bonds.
Right.
Bonds have to come out of the portfolio, so you have to have both in there.
I agree with both of you. I think dividends, people start looking at these great dividend players, some of these utility names, they're looking attractive. Rob, Greg, Courtney, have a great weekend. Appreciate it. Great commentary. We learned a lot. In the meantime, folks, President Trump meeting with his campaign team and advisors today to go over his next step. So what is the next move? I'm going to ask campaign spokesperson Erin Perrine. She's next. And later, Justice Samuel Alito creating a firestorm after he warns COVID-19 is threatening our religious liberty and freedom of speech. Is he right? Tweet me. I'd love to hear what you have to say.